As the markets price in rate cuts into the new year, those in crypto are betting big money and on a spot Bitcoin ETF, and it becoming a reality as the SEC gives companies a new deadline of December 29th to make final changes to their applications. The new deadline has led many industry watchers to predict a wave of approvals come January, but not necessarily news there. Bitcoin is now trading above $42,000, reaching levels this month we haven't seen since April of 2022. And for his take on what is coming next for crypto, let's bring in Laurence, Latimer, the co-founder and CEO of Dinara, a crypto trading platform. Laurence, thank you for coming in here today. So what is the importance of this spot Bitcoin ETF? I've been tracking this for months. I've been seeing the enthusiasm, but I guess the big question is, when we get this finally, maybe on January 10th, is it a sell the news event?
Yeah, and I thank you for having me, first of all. But as we come down to thinking about what's happening for the Bitcoin approvals, Bitcoin ETF approvals, the reality is that much of the enthusiasm, as you just said, much of the attention and much of the price movement has largely been priced in. That's what we think here at Dinara, and that's certainly what we believe. It's going to be a massive event for the industry. The work that's gone into that from some of the largest firms in the industry has been happening over some of them over 2 years. So it is a really massive event. It's a great sort of support for the institutionalization of digital assets and the mainstreaming of digital asset, widespread adoption. But we do think there's maybe a little bit of frothiness there, and that the kind of price movement that that many are expecting to see may already be mostly priced in.
And so with that in mind, you think about the perhaps tail, the longer tail of it, where we'll see a jump perhaps early on in inflows into some of these ETFs, but then what after that? What is perhaps a good baseline for us to consider looking at the amount of flows that actually make their way into one of the riskier parts of the asset classes out there?
Yeah. Well, we made some predictions for 2024, and so this falls firmly in the space there. We think that there's going to be some real meaningful appreciation across the whole industry. In October, the overall market cap for digital assets sat at around $1 trillion. It's now about $1.6 trillion. We think by the end of 2025, you'll be sitting at about $2.5 trillion in overall market cap. So if you kind of average that across the industry, we think there's another 50% or so that upside built into the pricing of all assets. We think Bitcoin's among them. What we'll see is that ETF demand that's created there will put a nice floor and support for a price movement. We also think there's some optimism around the legislative front. We hope to see some thoughtful legislative action in some point in 2024 as well. That'll again put some upward pressure. And then you have the Bitcoin halving, which is sort of a technical piece that's happening, I believe, in April. And that traditionally has also put some upward pressure on the price of the asset.
Well, and just thinking about that, that's a huge, historically, it's been a big bullish catalyst because it essentially means it's kind of clearing out some of the weaker hands in the, in the Bitcoin mining industry, because they're only getting half the fees, and that just leads to the lower supply argument for Bitcoin, or at least given a certain period of time, it'll be a fixed supply. But just thinking about where we are in the crypto cycle, it looks like we are firmly in the crypto spring. The crypto winter, I think, decisively is in the rearview mirror, thankfully. And we've seen the crypto springs and summers evolve to be several years in length. And so do you think we're at the beginning of this next cycle right here?
Yeah, I would actually argue that the approval of the Bitcoin ETFs will be the official nail in the coffin on that prior crypto winter. And so we are at this sort of new phase of development and adoption for the digital asset industry. And I think 2024 is really going to be, the major theme for me is going to be the widespread institutional adoption. And that's going to then really incentivize the kinds of headlines, positive headlines for the industry, which are nice, and a change of pace from the very difficult last 18 months that the industry has had.
And let me ask you, what do you think DeFi looks like in this next iteration? Because it got obliterated. A lot of communities were developed around Cardano and Solana and other assets, and just they fell off a cliff with the entire industry. So what does DeFi 2.0 look like?
Yeah. One of the themes that we're seeing amongst our own customer base at Dinara is really seeing this intersection between traditional finance and digital assets, and not just DeFi, but overall in digital assets. I think for DeFi specifically, You mentioned Solana. Solana has great metrics on speed, great metrics on low cost of network usage. You're seeing more and more use cases being built on top of that network, and that's been one of the best performing digital assets from a price perspective in 2023. So we think there's a lot of tailwinds right now in the DeFi space and more broadly in the digital asset space, because real use cases are coming online, real use cases being provided into the market that customers are demanding. And when you have that kind of institutional adoption that we believe we're going to see really precipitated by that ETF adoption, it's going to be a great year for digital assets more broadly.
Total coin market cap right now sitting at about $1.66 trillion. You're saying you expect that to get up to 2.5. When you think about the year that has been and the crypto winter that has been, you've seen the washout of algorithmic stablecoins, some of the more contentious ones. You've seen, additionally, some people get burned as a result of what we came to find out was fraud among some of the barons of cryptocurrency. All of those things considered, does that $2.5 trillion account for people who got burned in this crypto winter, making their way back in some form or another to the market?
Yeah. Somewhere around 50 million people in the United States own some digital assets in some part of their portfolio. Numbers globally are expected to, some analysts are seeing it upwards of 900 million globally will have digital assets in their, sort of as a part of their portfolio overall. So, we believe that there is real demand in the market from the asset. We think there's real opportunity from an innovation, technical innovation side, to bring new use cases into the market, novel technology that really drives value for consumers and drives value for the companies that provide them. So yeah, we hope that much of the negative energy and much of the kind of charlatans, if you will, have really been washed out of the industry, right? We know who's naked when the tide went out, and the tide went out pretty far in 2022, 2023. And the companies that are around today, the ones that are forming, they're doing so in a way that is, at least the ones in the U.S., that are in many ways highly regulated. One could argue, trying to really work with regulators, work with their legislative officials collaboratively. And I think the companies that are out there forming now that have been building quietly behind the scenes in 2023 are really poised for a breakout year in 2024.
Yeah, well, it was an entire polycule that got caught out there naked. Laurence, Latimer, the CEO and founder of Dinara, thanks so much for taking the time here with us today. Appreciate it.
Thanks for having me. Hope to see you again in 24.